afternoon. Welcome. Thank you very much for joining us here on this budget special. It's a budget roundtable ahead of budget 2026. Like every year, even this year, we all have expectations from Finance Minister Nirmala Sitharaman, who is all set to present her 9th budget. But this year, the circumstances are very different as compared to last few years. Our growth is looking good. Inflation is quite low, something that, India is really happy with. But at the same time, rupee is falling and foreign investors are flying away. There are some concerns, but there are opportunities as well for India to become Viksit Bharat. And that's the reason why this budget becomes absolutely important. What should the finance minister do and what should she really stay away from? Let's discuss it with our guests who are joining us on this special show today. We have Mr. Ajay Dua, former Secretary, Ministry of Commerce, Professor Arun Kumar, who is an economist, Laurie Laird, who is an economist and a political commentator, and Mr. Ajay Bagga, who is a market expert. Thank you very much, all of you, for joining us here on this special budget discussion today. Ahead of the budget presentation by the finance minister, we've got an interesting document. And I'm talking about the economic survey that gave us a sense of where we are right now and what we aspire to do in the near future. If we look at the GDP growth, despite the turbulence, it's being seen at 7.4% for the current year. It's pegged at 6.8 to 7.2% for FY27, despite the turbulence. And I want to begin by asking you, Laurie Laird, is India an outlier amid global turbulence that we are witnessing?
Interesting question, because the global turbulence that we talk about is such a sporadic thing, and we're seeing so many countries create policy based on the whims of Donald Trump's trade policy. Now, India has done something that I think is incredibly brave. It has been saddled with some very, very heavy tariffs, not on all of its exports to the U.S., but on some key exports. And India has done something that I think a lot of outsiders did not expect to see, and that was to be brave and to set some new trading arrangements with some very big trading partners. And I think this deal with the EU struck earlier this week is a massive deal. It is so much more aggressive, so much more extensive than anyone thought that these two reasonably protectionist trading bodies might ever come to. So many goods will be tariff-free, or we'll see a sliding scale of tariffs reduced over the next couple of years. This was a brave move, and I think it's something that will keep India in very, very good shape. But I also think that there is a risk that Donald Trump's tariffs will change. And I think India has done something very clever to forego other, or to find other trading partners, put the U.S. on hold for a little bit, let that play out. And remember that the U.S. only takes 17% of global imports. There are other big trading regions out there. And because of that, I think the future for India is really quite bright.
Okay. Mr. Ajay Dua, in your opinion, what's ensuring that India remains the bright spot despite the turbulence?
Thank you, Shivam, for having me in this discussion. I like to point out that, as was just pointed out, that India continues to be a bright spot despite our having been imposed last July one of the highest duties, real tariffs on the imports from India of 50% by President Trump. I would not deny at all, and nor does the economic survey deny it. The preface to it, which I must compliment the writer, Mr. Nageshwaran, it is one of the finest, frankest prefaces to economic survey ever brought out, if I can say so. He admits, and he also, whatever he is advocating, he is adding the cautions to it that it may happen, may not happen, under what conditions should it happen. That is how an economist should be presenting an analysis, not what is expected of a government servant only painting one side of the picture. Having said that, I think we've been able to survive and with a degree of confidence I am saying it, that the $50-odd billion which we might be losing to the United States for the whole year, meaning in 12 months, so this year it will be only for about effect for 7 to 8 months, by March ending this year, we have almost made it up by being able to diversify our export destinations.
Okay.
Not that any of the agreements which we have effected, other than the one with UAE and Australia, which has taken effect. With Australia, only the low-hanging fruits. With UAE, the entire gamut of agreement is ready. We are benefiting, but going forward, these agreements, including the one which was just referred to, the mother of all deals, as President Ursula von der Leyen called it, is going to be taking effect in about a year's time, but certainly it will be a game changer. But more important, I think we have prepared ourselves to be able to handle both what is causing concern. One, the coming down of the value of the Indian rupee, and second, the foreign investment declining into India, the two factors which have been highlighted in the economic survey.
Okay. Interesting. Professor Arun Kumar, they say that the biggest way to fix a problem is to first identify the problem. Do you think our diagnosis is correct? As Mr. Ajay Dua also mentions that our eco survey tells us exactly where we stand, and it's quite frank in its opinion as to what we need to do. It asks us to be cautious where we are supposed to be cautious.
Thank you for having me. I think, the IMF has come out with a report saying how our data on national accounts is less than reliable.
Okay.
It's given a grade C. Now, I would have expected the economic survey to, meet this challenge. How robust is our data on economic growth? Is it really 8.2% last quarter? If the informal sector, they flagged the issue that the informal sector is not measured properly. Informal sector is about 45% of the GDP. Now, if that's not measured properly, then our GDP growth would be overestimated. Second issue that they've raised is that because our GDP database is 2011, and that's outdated, it should have been revised. That might revise our GDP data also. Third is the census data is 2011 again. The CPI data is also 2011, and these would cause problems for measurement. Okay. So I think this issue should have been raised and squarely met the challenge of what the data is saying. Having said that, I think the other panelists have already flagged the issue of the huge uncertainty, global uncertainty. Now, when there's uncertainty, investment declines. And especially because the rupee has been declining, the dollar return on foreign investment has gone down. And that's why the net FDI has become negative and the FII is going out of the country. So that's posing a problem for investment. It's not just foreign investment, but even internal investment is a challenge. Because if there's uncertainty about how our exports will do, then investment will suffer. If the rupee dollar parity is changing, it'll suffer. And because the gold prices have shot up, and why have gold prices shot up? Because the dollar is no more a credible currency. So people are moving into gold. Central banks are moving into gold, and therefore gold prices and silver prices have gone up. So those have become more desirable investment, and that's why the investment suffers in the economy. Now, how are we going to meet these challenges? I think the economic survey should have squarely come up with answers to these, because if we don't come up with answers to these, then there'll be a new problem. Next, the problem of unemployment. The unemployment in India is quite high, even though formally it's only about 4.5%, but actually there's underemployment and there's disguised unemployment, and large number of women are outside the labor force. So even though the men's labor force participation rate is good, 70% or so, but for women it's more like about 40%. Okay. And for the educated youth, the problem is they're not getting appropriate jobs. Okay. So therefore, employment is a challenge, and the economic survey has a chapter on AI and the challenge of AI. the challenge of AI is that a lot of skilled jobs are getting displaced. Call centers, BPOs are going to be over.
Okay.
Large number of technology companies are laying off people. For instance, TCS and others abroad, Meta, etc. H-1B visa is a problem, so our youth cannot go there so easily. So in other words, there are big challenges that are ahead, which we'll have to fulfill. While what Trump has been doing is a transitional thing, but I think next year will be a full year. And the trade negotiation with the EU, the new agreement, there we are opening up many markets. And on the other hand, there's a chapter on Swadeshi.
Right.
So how does this sit well? You talk of Swadeshi on the one hand, and with UK and EU, you open up markets.
Right.
So is this something that's contradictory? Or is this something as a part of policy?
I think he also explained in that chapter very nicely that, we need to make the world want to buy Indian. So that's an interesting point as well. And before I go across to Mr. Ajay Bagga on his comments, I want to quickly take a rebuttal from Ms. Laurie Laird as well on the point that you made about IMF. Do you also worry about our numbers? As Professor Arun Kumar mentioned, do you doubt the numbers that government comes out with, the GDP numbers, etc., given that in February we are going to see major changes on that front too?
I don't know about doubt, but I think that there are many concerns about the two things that the professor brought up. One is the base year that we are using as comparatives. The other is the way that GDP is deflated, whether we are using the correct inflation rate, because there is a disconnect between what's called nominal growth, which looks at the growth of your economy without adjusting for price changes, and then real growth, what does make that adjustment. And there is a disconnect in India between those two numbers. And I think a lot of outsiders, acknowledging that the Indian economy is in pretty good shape, do have some questions about the specifics and whether that real growth, that inflation effect adjusted growth, is an accurate picture of where the economy is.
Okay. Mr. Ajay Bagga, where do you stand? Because despite all the uncertainties, turbulence, our numbers are looking pretty promising. And one word, if I can say about the Eco Survey today, the sentiment that it seemed to convey was optimism, that, we can fight these challenges provided we remain cautious, provided we continue on Reform Express, something that even the Prime Minister spoke about today.
Yeah, actually, if you see the Prime Minister's speech today, he talked about manufacturing in India, upping the quality quotient. So that is very critical. We have to be able to compete on price and on quality both. And we can't just keep on protecting our suboptimal industries. Autos, for example, in India, two-wheelers are world-class, but four-wheelers, we are at least 2 generations behind because of all the protection we have given them. So overall, I think the move has to be to get integrated into the global supply chain. 3 points I would like to make. One, China was at $4 trillion GDP in 2007. Japan was in 93. US was in 1985. Germany crossed it in about 2017-18. Germany and Japan are sitting at nearly the same number. What we are running a risk is what you mentioned about cautious optimism. I am optimistic, but we can't take it for granted. That is one. So we need massive reforms. We need massive liberalization. Second is we need to keep an eye on the debt that is growing, especially in the states, because of this uncompromising welfare schemes that are coming out. CapEx is not being spent. And you look at the state loans that are going up. For example, RBI has cut rates by 125 basis points, but just in the last 4 weeks, our 10-year yields have gone up 25 basis points. Liquidity is down. Again, the welfare schemes are crowding out the CapEx at the state level. That has to be watched out. Third is disinvestment. There are very glowing examples. I'll give one of Hindustan Zinc. 2006 and 7, 770 crores was raised by disinvesting Hindustan Zinc. Mr. Ajay Dua was there in the government at senior levels at that time. The government, just for its residual stake, has earned 32,000 crores in the last 20 years. And their stake today, which was at that time was worth 600 crores, that stake is worth 90,000 crores today. So as a other example, Rashtriya Neelanchal Ispat, that was a mothballed plant. 2 years, there was no production. Tata's bought it for 12,000 crores. It's making 1,000 crore profits now. So as a national waste, a fully running plant was mothballed, which was privatized, and it is now contributing to the GDP. So that 40 lakh crores of the government stakes in the companies, in the listed space, you leave aside the unlisted, if you monetize the government land holdings itself, that is, such a massive possibility. But at least the low-hanging fruits of 96% LIC, you don't need to hold 96% of LIC. 5.5 lakh crores sitting there. 40 lakh crores is available in PSU companies. Go and do that disinvestment, reduce the debt burden. So most of your payments are not going into salaries, pensions, and interest payments. I think that's very critical. And reforms we need, especially other speakers have already spoken on the foreign investments. The foreigners are not coming in unless you give a 5-year tax window that these are our stable policies. Anything else we bring in will get grandfathered. So you know your business plan. You have to welcome that foreign capital.
On one hand, Mr. Ajay Bagga, these are the measures that you're saying that can actually woo foreign investors again. But at the same time, we are seeing these free trade agreements being signed as well. The mother of all trade deals, India-EU FTA, is being seen as. Do you think that also could perhaps bolster investor confidence into India?
Yeah, it will. It will. Definitely, liberalization is good so long as you take care of a safety net for the affected poorer sections, weaker sections. It helps the sentiment. But more than that, the broader policy framework, single window clearances, being able to tackle the on-the-ground bureaucracy, the Mofussil level, district level bureaucracy, I think those are very critical. And policy continuity, that one government changes and the second one comes and reopens all the contracts. Those kind of things we have to look at. Taxation, we have to stop the amount of tax legislation or tax challenges that are going on, and give a clear policy regime, because we are not the only game in town. There is Vietnam, there is Mexico, even a Bangladesh textiles, for example. We have to learn from all of these. And I'm sure this budget will provide some platform to some extent for that. We have 2-3 years of political capital, because before we get into the 2029 national elections, this is a good time. This year and next year will be good times to bring in some of those reforms.
Okay, interesting. Good time to bring in some big reforms. Professor Arun Kumar, 2-3 big, bold announcements you want the finance minister to make on 1st of February.
Our problem is growing inequality and unemployment. They're interlinked. If you have greater unemployment, you'll have greater poverty and you'll have greater inequality. The fruits are going to one side and the labor is on the other side. I think what the budget needs to do is refocus on employment generation. What the budget has been doing till now is that, for instance, the capital item has been going to capital-intensive sectors like big highways, big railway freight corridor, power sector, IT sector. These generate very few jobs. Where do the jobs come? In education, in health, in rural development, in agriculture development, and in the rural employment guarantee scheme. These are the ones that have faced cuts. So if you cut where the employment generation is and focus on the capital-intensive sector, you're focusing on the organized sector and away from the unorganized sector. We also need more education and health, because we have to move up on the R&D chain. Our R&D is very poor, and that's why we lag behind in the global thing. With China, we don't have a trade agreement, but we have a $102 billion trade deficit. With US, we don't have a trade agreement, but we had a surplus of $50 billion. So why is this happening? It's because our technology is very weak. And that's because our education systems are very weak. So I would want the government to focus more on that and encourage the state governments to focus on employment generation, education, health, etc., by transferring specific money on these items. This would change things because your internal market will grow.
Right.
The unorganized sector, which is 94% of the employment, if it has more incomes because of these things, then the demand in the economy will grow. And if you look at the RBI data on capacity utilization, you find it's between 70 and 75%. You need to raise it to 85%. Then the private sector will start investing. Private sector keeps saying that public sector is investing more, but because of lack of demand, we are not investing more.
Right.
So I think the key is to get demand going inside the economy, which will then boost the organized sector and the unorganized sector.
But Mr.
And if
Ajay Dua, if you look at the eco survey, it answers both these points that Professor Arun Kumar has raised very clearly. One, it says domestic demand, it is continuously anchoring the growth that we are witnessing. And it also mentions that private sector is showing intention of investment. Now, given what is mentioned and given what is needed, as Professor Arun Kumar mentioned, what are 2-3 big things you want the Finance Minister to announce on 1st of February?
Shivam, I'd like to first answer my friend Arun Kumar's issue about the data of which he quoted. Yes, we've been talking for a long time to update the base year, not keep it as far as 2011, 12. We've also been talking about get more and more data of the informal sector about which estimations really get made. But when you look at all these are important issues, but when you look at the delta, that means the increment, the same similar set of defects was there in the previous year's data. So if you are seeing, Arun, just 1 second, if you are seeing the current year's data, it is as flawed as the data which it is being compared to. Yes, there could be an exaggeration somewhere, exaggeration or exaggeration of the data, but it doesn't make too much of a difference on the increase. It may make a difference on the base itself. So let me not drag on a discussion on that because there can be certain replies as well. But I would like to see the Finance Minister take definite steps on ensuring that the investment in the economy continues.
Okay.
The investment has to be by the private sector for sure. It cannot be taking away the benefits of lower taxation which have been provided to it for year to year. And at the same time, keep that money for investing in commodities, for investing in the stock exchanges, rather than being upfront for which purpose it was given to them. Similarly, the net data which was being talked about, FDI, we've had some amount of foreign exchange FDI come in, but it gets to a negative or a near negative zone. Last year it was under a $1 billion positive. It is because our people, the businessmen, the large ones, prefer to invest overseas. The situation overseas is not going to be far better. Our friend President Trump has done the damage the world over. It's not just that he's confined it only to India. It may vary, but if the rate of growth in the rest of the world is 3.5% or 3%, and the Indian rate of growth is 7%, that's all the survey says. It's not talking 7.4 or so. It says this year, last year we got 7%. We will get 7% this year also. It means that the increase is going to be coming from the Indian market. Indian markets per capita income also arise when the GDP increases. So the government has to be working with the private sector to make sure that the investment comes here. Second, no denying the fact that you need more investment in the social sector, started health, because health by itself increases productivity of labor, and education,
I think some
etc.
interesting views you have shared with us. Ms. Laurie Laird, as somebody who has, closely watched the budgets here in India, has followed India's economy as well. What is that one thing, that you would want the finance minister to definitely announce on 1st of February?
Well, I think that the thing we want her to do is not make any mistakes, not put any sort of constraints on the good work that has already been done. I also would like to see some degree of awareness of a couple of the international pitfalls that may be ahead of India. One would be a risk, and some of these are not necessarily in India's gift, but I think there needs to be an awareness. One would be a risk that this EU trade deal is not ratified. The EU just did a trade deal with some South American countries. That's now gone to the European court system. So that could be years away from ratification. A lot of EU countries are going to be aware of their domestic electorates. And
Right.
I think getting this India trade deal ratified is a risk. There's another risk here that I think is quite big, and that is the price of crude oil. India, as such a big importer of energy, needs to be aware of this. And there seems to be a general consensus
Right.
that oil prices will be low and will stay there.
Right.
I'm not sure that paradigm is true. That is something that she needs to be aware of. And one more quick thing is Donald Trump's trade policy changes. Be aware of that and stay to your guns when you're looking for other trading partners.
Okay, interesting. I want to give you the last word, Mr. Ajay Bagga. In 10 seconds, what's going to be your message to the finance minister?
No, it's a great opportunity for us. So make it a landmark budget and deliver on the Viksit Bharat promise.
All right, we'll leave it there. Thank you very much, all of you, for joining us on this wonderful discussion. Thank you for sharing with us your thoughts on what to expect from FM Nirmala Sitharaman on 1st of February. We'll see what eventually comes out. Like every year, this year too, the list of expectations is quite long. Thank you very much for joining us.